Hello fellow traders, this is another episode of the series. As we have mentioned many times, we are trading our real account for the past years. All profits go to my subs, so stay tuned, subscribe, like, leave a comment for the YouTube algorithm. Today, we will analyze volatility and liquidity and how these two are related. I've got so many questions from you. I'm not quite sure if I'm able to reply to all of them. This is the reason that I have created this channel, so I can redirect, let's say, people that have similar questions, and doing a video for me it's much easier. Of course, I'm trying to oversimplify many things. Also, you can find me in Quora. However, I doubt about the quality, let's say, of the questions there, because I have also messages in myfx. Of course, these are two different. In Quora, people have no idea what they are talking about. However, in myfx, the question is a bit more targeted, let's say, and more differently, because most of the people there are already they are traders already. So for you that some people are new and you don't know me, this is a new channel, so this is the reason I've started trading a real account and give away my profits. So today, volatility. You need to study your market well to understand some major differences. You might have volatility when you are expecting some important news to hit the market. I have opened here the USD CAD. I will show you, I will give two examples with major news that hit the market. I'm already short. Remember, this is the account that I'm trading for you. You can check the account ID from my first video. However, this account was created more than a year ago. This is the period we had some interest rate decisions. I won't get into more details about that. I will make a separate video on fundamental analysis and how the important data and and how this can be applied. I have explained many times, fundamental analysis for me is the most important part when we are analyzing an entity that we are willing to trade. However, volatility can be created either by important news or if we have lower liquidity. We will check everything in this video. I will try to oversimplify things just to understand the basics. So, we were short in this market on the USD CAD. Remember, we start this account with 100 USD because I've got the question that can you trade with 200 USD? Well, I started with 100. Of course, we stepped the gas a bit more, let's say. Remember that trading is risky, so we are doing that for entertainment. You don't have to do it. This is the reason that I'm doing it. So now the equity stands at 528. The major difference, of course, we are talking about euro. The account I'm referring to 100 USD, so this is much more in USD terms. Let's say this is not the important fact. My giveaway will be standard, first at 100 subscribers, then to 1,000, 10,000, and I'm not quite sure. Also, because we have the Bitcoin, I'm also giving for that. Still waiting, of course, to trigger. I'm not sure if I will be able to make the video today. However, I will try to make it for sure because it's a weekly and I don't want to miss my deadlines, let's say, because I promised that I will do that video after I've got so many requests. So let's go to our real example. What happened on the 16th of the March? We were waiting the Fed's interest decision. This is the market and how it moved. It didn't move so much. However, it was a volatile day, but not so much. Why? We know when the interest rates will be increased, we will for sure have a bullish momentum for the USD. Of course, for any currency, but I'm referring to the most popular. Now, even though we had a 0.5% increase interest rates. I will also give explanation about that, how the Fed changed the interest rates, because they cannot do that every month. I won't get into these kind of details. We will focus on the liquidity and volatility, if we could say. I will also tell you how to measure it, some proper indicators. You know that I hate indicators. However, you need to take a look. So at that day, the market went higher. However, the market had already adjusted because everyone expected the Fed to increase interest rates. The unexpected event would be if instead of 0.5 we have a 0.25. This would give the signal for a bearish USD momentum. And why is that? That's why trading can be tricky. Even though the interest rates were higher, it didn't affect the market. Why? Because the market has already done the move. Everyone expected 0.5, so nothing happened. It did. It went 0. If it was 0.25, however, even though the interest rates would be higher, the market will be bearish because everyone anticipated higher. Because our fellow trader that day might choose to scalp. He waits, or she, I don't know, waits for the interest rates to come out, and he plays a buy order. However, nothing happens. The spread is huge, and unfortunately, no profits for the day. However, he had to use a bigger lots. I'm guessing, I'm not sure, but that's how it's happening when you are scalping. Again, I'm not against scalping. However, I do not recommend to new players. So, even though he did, he had zero impact, and he still be confused why, even though the interest rates were increased, why the market didn't make any move. Well, the explanation is very simple. Everyone anticipated that move. Everyone knew that the market would go to 0.5, so nothing changed. If this makes sense, it should. Again, second example, non-farm payrolls. I didn't put them at the same at the same the diagram, let's say. However, let's say that you are waiting the non-farm payrolls. Even though the news are bad, are better than expected, this will give a bullish momentum to the USD. However, a good trader knows, based on the data and analyzing the non-farm payrolls in the long term, a trader should be able to determine the movement. If the non-farm payrolls continues to be bad for the USD, we are waiting the USD to be bearish, so we are most likely feel confident taking a short position, even though the news are better than expected, even though at the given moment the market, the USD did a bullish move. It doesn't matter. We are expecting at the long term to be with the correct market move. Also, if you have some stocks, we all know how this correlation with interest rates and so on. Let's say that you are waiting some earnings, they didn't catch the target, however they were profitable, so we still know that this company will do well in the future. So this might create volatility, this might move the market against us, but still we know that this given company is going well. I mean, he's investing in assets. I won't get into this kind of details for this episode. So based on these two examples, you need to understand that many major important news create volatility in the market. And now, how liquidity affects the market. The less liquidity you have, the more volatile an asset or an entity that I prefer to call them is. Why is that? The more exotic a pair, I'm using the USD CAD here, is not so much of an exotic pair. However, I will just give an example. I could use the Australian. I think the Aussie would be more appropriate, let's say. However, there are still many exotic pairs that I do not recommend to trade. Anyway, at this given example, let's say that at this price, there are millions of transactions per second. Someone is willing to buy and someone is willing to sell. So let's say that we have two teams, the buyers and the sellers. So the buyers are significantly less, and also the sellers are significantly less. We have less liquidity. Now they are making an offer at a price no one is willing to buy. They are lowering the price, and again no one is willing to buy. They are lowering the price again and again. So at some point, what's happening? The price jumps directly without any middle levels, let's say. Why? Because there are not so many people are interested in buying. And I'm not saying that when the price it's overpriced, we have explained those definitions. I mean, oversold, overbought, these are just contracts. We will try to explain how liquidity will affect the market. So at this point, at this level, no one is willing to buy. The prices goes lower, again no one is willing to buy. Lower, no one again is willing to buy. So we see this volatile market range. How to identify? Unfortunately, we cannot measure how many let's say, what's the capital in the Forex market. We cannot do that. There is no way. There is an index based on the S&P. I won't give this example at this episode. I think it is not related so much. We can use some indicators that we can measure, let's say, the volatility, not the liquidity. I will put them in the description below if you want to give them a look. Again, I'm not so good with indicators, at least in my perspective. You need to have a proper way on how to use them, because I'm listening many people that claiming that they can trade on indicators and so on. However, that's why I have also the Forex Debunked series, that I am debunking these people that make just an adjustment in the indicator or a moving average and so on, and they are profitable. I totally doubt and I don't believe in these kind of miracles. You cannot win the market so easy, either by adjusting an indicator or if you are able to do some changes, let's say. Remember what we've said. Trading can be very tricky, can be very hard. It is very risky. However, it can also be very rewarding. I've got the same question, how long it might take, or the numbers are very hard. The numbers are always against you, against us, and I will put myself also inside. Most of the traders quit at the first year of trading. Most of the traders. They try to analyze the market so easily with a moving average or with a fancy indicator, and then they are trying to combine. However, when they are changed time frames, buy becomes sell, sell becomes buy, the market becomes tricky. They might win some orders in the beginning, some trades in the beginning. However, in the long term, they won't have any results. Again, thank you very much for your support in my series and in these videos that I'm creating on YouTube. Also, it's very hard to redirect people from myfx. I know, because they are already trading. Most of the videos are for newbies, for people that are just start trading. Again, remember what we've said. For no reason, do not attempt to trade with any real money. because trading is risky as hell. That's why 90% of traders are losing money in the market. Also, you don't have to pay for some seminars, some gurus there with a zero proven trading history and so on. You can find a lot of free material out there. You can also check my videos. I'm trying to upload as often as I can, at least some meaningful videos that will give you an edge in your trading technique or strategy. Or if you are new in trading, I am sure that all my videos will help you to create your own strategy, and this is the reason that I'm creating these videos. We have 3 series running: the Forex Debunk, our tutorials, let's say, that I'm trying to give you with a different way, and also the Bitcoin series. Again, thank you very much. Thank you very much for watching my videos. I hope I'll see you in the future, and trade safe.